Hi everyone, my name is Rusmin and I'm the co-founder of the Fifth Person. At Fifth Person, we invest in great businesses, be it for dividends or capital gain. My job here is to help retail investors to do the same so that they can grow their wealth safely and consistently over the time. Okay, so as a retail investor, when we invest in stocks, we want to grow our wealth. We want to receive a steady stream of passive income, but there will come a time where we need to decide whether we should hold on to the stock or we should sell them. Okay, so in this video I'm going to cover when should you sell your stock and when should you decide to hold on to them. Okay, so let's begin. So how do you decide when to sell the stock you have in your portfolio? Okay, so the first important criteria that I decide to sell the stock in my portfolio is when I realize that I actually made a mistake. So back in 2010, I still remember that I actually invested in the road construction and maintenance company called OKP, which is listed in Singapore Stock Exchange. And this company, when I first invested using the funds money, I thought that their business is actually recurring in nature because when they construct the route, usually the maintenance part will come with it. Okay, but what happened with this company is that when they construct a route for the government, they typically have to continue to bid for the contracts to maintain the route. Okay, so the contract may not necessarily always go to them, and then I realized that after I invested in this company, I realized that this is not as recurring as I thought, because a lot of their business are very project dependent, and if you don't secure the project, they will lose the revenue, they will lose the business. Okay, so this is a company that is not as predictable as I thought. Okay, so I realized that I made a mistake and I decided to sell the company off at the losses of about close to 20%. Okay, so this is one of the things that you need to do if you realize the company that you have in the portfolio is not the one that you actually wanted, so you have to sell it off. Another common reason that I will sell off the stock in my portfolio is when the fundamentals have started to deteriorate over time. Okay, so this is what happened to me back in 2011 when I invested in a shipping company called Maybach. Okay, so I invested in Maybach because they were financially very strong and they were able to actually capitalize on the shipping up cycle. But over the time, the company started to venture into oil and gas sector and they took on a lot more debt. Okay, so as shipping down cycle prolongs, this is one of the companies get actually hit very badly. And of course, I was sitting on the losses of close to 60%, and I decided to realize the losses because the company fundamentals have deteriorated. So if you have any stocks in the portfolio that have businesses that are actually being disrupted or facing certain headwinds, you may want to reconsider that stock in the portfolio. Or you may have some companies that have used to be a good management, but today they are run by lousy people. Okay, you may want to reconsider the investment as well. Okay, so sometimes certain stocks that financially may be also weakened if they take on too much debt, and if you're not comfortable with the debt, you may want to also reconsider that investment in your portfolio. If I found a stock that is better than the one that I have in my portfolio, I may also consider rotating them out, the one that is better. Okay, so basically stocks that have better risk and reward ratio as compared to the one that I have in my portfolio. Okay, so this happens to me about 2 years ago. I have actually found one company that is going to develop a pool of investment properties in China, and once it's completed, it's going to bring in good rental income, which is recurring in nature to the portfolio, and the company may start to pay out very stable dividends. Okay, so this hasn't happened yet. A year later, I actually came across another company that is also have a pool of investment property that is already completed, and they are actually bringing good rental income to the portfolio and paying shareholders a good dividend yield. Okay, so between these two companies, they were actually trading at the same valuation. Okay, so this company hasn't finished developing their investment properties and hasn't paid out the dividends yet, whereas the other one already completed their investment properties and they are also located in a good location, and yet they're actually paying very good dividends. Because between these two companies, this one has a better return and lower risk as compared to another one, okay, the one that I have in my portfolio. So I actually decided to switch out this one, okay, and then inject a better one in my portfolio. So that actually make my whole portfolio a lot better because I have one company that have a lower risk and better reward in the portfolio. Okay, so if you find a better stock in the portfolio, you may also do the same strategy. So your next question is, when should you continue holding onto the stocks that you have in your portfolio? Okay, so you should continue holding onto them as long as their fundamentals remain intact. Okay, so their businesses are expanding into other markets, they are introducing new products to their customers, these businesses continue to run by good people, and they don't borrow too much money. Okay, so as long as the company passes those criteria, you want to own them in your portfolio. Okay, and when you own a good quality stocks in the portfolio, typically these are the ones that we're going to give you a lot of good returns over the long run. Okay, they are the one that compounding your money. Okay, so also when you invest in good quality stock, typically you don't have to worry about selling them. Okay, so this is how you actually grow your wealth over the long term in the stock market. Okay, so I hope you enjoyed this video, and if you do, please share it with your friends. And for more investment insights and tips, please visit fifthperson.com. And once again, this is Rusmin from Fifth Person, and I hope to see you soon.